Well, hello, John. It's good to see you on this very last episode of The View for 2024. John, you've just returned from a well-deserved trip to Thailand and Vietnam. What was it like? I hope you had a good trip, but what was it like seeing Australia from a different part of the world? And what impressions did you gain from being outside the country?
Well, you'd have to say, Paul, there are a happy lot of people, those 200 million people who reside in Thailand and Vietnam, and they're obviously earn about a tenth of what we earn in salaries, or a seventh, and they don't seem stressed by anything. Inflation's moderate. Interest rates are much higher there than in Australia. Most of the people can't afford to buy a home, but they get on with life. Everyone drives a motorbike, which it's quite stunning. In Ho Chi Minh City, you have 100,000 motorbikes coming at you when you're trying to cross the road, but it works. But as you sit there, and I'd been in Thailand in May, Paul, so I go back and do detoxes there and get healthy again and clear my mind. It was amazing that the Australian dollar had devalued 10% against the Thai baht in the last 6 months. And you just sit there and go, what is going on in this country that, even though I loved Thailand, I just don't understand why our currency would devalue against the Thai baht. And then in one of the resorts, or as we were starving ourselves, I was sitting with a couple of other international tourists, and an Australian citizen, but she lives in Bali and she's a UK passport, born in the UK. She has money in a UK deposit, and she was telling me how she'd made 8% in the last six months of the depreciation of the Australian dollar against the sterling. And you've got to question, it's when you go outside Australia and see the decapulation, or whatever the word is, the devaluation of the Australian dollar against the whole range of currencies, which has no logic to it. Now, Australian economy, compared to these economies, is far stronger. There is a serious problem, and I keep on talking about the flow of money out of this country from superannuation. It is serious, and last night we're doing this interview on a Thursday. Australian dollar went back to 63 cents and collapsed overnight. No one in the press, the government, Treasury, the Reserve Bank wants to talk about it, but we are creating inflation by a devalued currency, and we need to do something about it. Fix that problem, we'll fix a lot of problems with the Australian economy.
Yeah, it's actually interesting because I think a lot of people were under the impression it's just the strength of the US dollar that has driven the Australian dollar from kind of 69 US cents at the end of September to under 63 today. But what you're telling us is that it's actually devalued against a range of Asian currencies as well. And just yesterday we had the MyEFO announcements. What did you make of that? It seemed quite a, I don't want to use the word depressing, but Jim Chalmers' press conference, he seemed very, very defensive, and there seems to have been like a $22 billion turnaround in the budget outlook.
Well, I take no, I completely ignore their forward estimates. They're so wrong, so consistently. I think it's a joke, forecasting out 4 years. They can't even forecast out a year. The budget, as is $2 billion better off than they told us in May. And they sneaked over that. The cash position is $2 billion better. And that's after 5 months. So give it a break. And that's after losing or overestimating corporate taxes by $5 billion. Corporate tax collections are down $5 billion on forecast. Yet we're $2 billion better off on the budget outcome. So the whole budget itself is nonsense. There's a $5 billion put aside for pre-election giveaways. I think, without being too rude, I think the country is being run by clowns in the parliament, and I'm talking both sides. I mean, the reaction of the opposition that don't seem to understand that they're being conned by the government to try and lock the opposition into not promising anything, and to scare the population of Australia about spending money or investing in our future. It's an appalling situation when we have $4 trillion in super, And then one of the questions from the press, oh, how's it going to feel when we go through $1 trillion of debt? Like, we are a $2.8 trillion economy. I will confidently predict we'll have $2 trillion of debt in 20 years' time. It won't matter who the treasurer is. But probably when we get there, the economy will be $4.5 trillion in size. I mean, these sort of comments and the lack of analysis about how large the Australian economy is and how wealthy and rich we are, which is stark when you go to Thailand and Vietnam and see people who are earning $10,000 a year and are happy. It's quite appalling. Australia is, from afar, looks like a very sobering place to live, and yet we are the best place in the world, but affected by poor leadership.
Mm. John, overnight in the US, the Federal Reserve cut interest rates by 25 basis points, but it was what I'd probably describe as a hawkish cut, in the sense that Powell indicated that they estimate that there'll only be that they'll pause now, and there'll only be 2 further cuts next year. And I think the market previously had anticipated somewhere around 3 or 4 cuts next year. So markets sold off overnight. It's fair to say that they had been rather exuberant in the post-Trump election period. So perhaps it's a bit of give back. What did you make of the Fed action?
Well, the Fed, either way you cut it, is going to be looking at 3.5 to 3.75% interest rates by mid next year.
Yeah,
that's still going to be 1% above inflation. So it's a nice. The yield curve is appropriately priced. The problem for America, of course, is the higher cash rates feed into higher bond yields, which feeds into higher cost of debt for the American government, which you can't afford to pay. That's the bigger issue, which the American stock market ignores, and I suspect it'll ignore it. Give it a week or so, and they'll be back to rallying again. I think it's a forced correction. Don't say it's not overdue. Stock market very expensive in America, but where else do you invest in the world today? Particularly, do you want to invest in Australia with the leadership here? But the other thing about it, the Australian stock market will fall today on the back of America, yet the currency's taken a 1% hit. Now, why the stock market would go down over 1% when the currency takes a 1% hit is beyond belief again. We are a trade surplus country. We export massive amounts of iron ore, coal, LPG, LNG to the world. We will benefit from a weaker Australian dollar, yet the stock market will fall, which shows you that the amount of thoughtful capital being invested in the stock market is getting close to zero. It is just indexing, ETFs. Now, if that's how we want to invest, this is what we're going to get. We're just going to follow the leader with no logic to it. And at what point the international assets of our industry funds are cut and money comes back to Australia, God knows when that will happen. And that would lead me on to a thought process about investing in energy in Australia, which hopefully is your next question, because the two things which stood out to me sitting overseas, obviously I read the budget update on the plane coming back last night, but the discussion around energy last week and continues to be inane, just plain dumb.
So it's one of the sectors that has performed very, very poorly compared to the rest. I mean, markets just year to date in the US up until last night, I think the S&P 500 was up about 26%. The Dow up about 16, NASDAQ up about 30, and we were up about 11. Maybe after today we'll only be up about 9, which would still be a very average or even a good year. Can you explain why we've underperformed, or is it all about American exceptionalism, as you?
Well, we've done particularly well, given we've got no earnings growth.
Yeah.
The thing that jumped out, and I just mentioned it, if you look at the mid-year budget update, they've cut corporate tax collections by $5 billion. Well, you cut tax collections because you're not making any more money, you're making less money. And that alone should trigger alarm bells to a government. You know, it's not as if we've had a tax cut for corporates. We haven't. We've had a tax cut for pay as you earn. They're paying more tax even with the tax cut. So Australia's earnings are not going anywhere. Our market's gone up with PE expansion, no more so than Commonwealth Bank, which has gone to 26 times no growth earnings. And we think that's what a wonderful place to invest in a bank that doesn't grow its earnings and dominates the stock market. Now, we are causing our own demise in terms of the equity market in not creating new companies, not creating new sectors, new industries. And this excessive reliance on the finance sector, which is just churning money through the housing market, it's not an attractive place to invest for, I'm sorry. And if you're a foreigner and you're looking at a currency which doesn't seem to have a flaw to it because the local capital providers, the super funds, don't even want to invest here, tell me why, from a foreigner's perspective, you want to invest here. The only sectors would be the resources sector.
Yeah.
And I think one thing I did sit back and think this, at the BHPs and Rios and the Fortescues, and despite all the nonsense about a slowdown in China, it's still growing 4%. It's still consuming more and more iron ore and coal. There is no sign of a cut in demand. They might have inventory issues, sure, but you've got the rest of Asia. And as I said to you earlier, 200 million people reside in Thailand and Vietnam. Well, those economies are not going to stop growing. They're not going to be dynamic, but they're not going to stop growing for the next 50 years. And they will demand more and more of what Australia can supply. We've just got to open our eyes up and open ourselves up to the opportunity and stop this ridiculous thought process about we've got to stop our exports. And uranium is a classic. Why we've still got a ban on uranium when the whole world is looking at nuclear transition?
It is crazy. John, it's I was going to ask about what were the big surprises of 2024, and for me certainly one of the big surprises was that the bank index went up almost 50%, which is incredible, as you say, in a low growth or no growth environment. So are you suggesting that perhaps now is the time to make the switch from banks into resources? Because truly, Australia's only got a few world-class champions, and two of them are BHP and Rio, and they're looking pretty cheap.
I don't think there's any doubt what you said is correct, and timing is impossible to predict. I think there is an overlay of ESG investing, which is also affecting the Australian index. And as we push more and more money into super, and as we put these overlays on the investors, index overlays and ESG overlays, we are, creating a problem in terms of stock performance and share valuations, which needs to be rectified. So that's my only caution. There's a lot of, we've seen it with Woodside in the last 12 months, the stock has been destroyed by the ESG overlays. So one of the great Australian energy producers, no one wants to buy. It's quite alarming, even though, we know that 80% of the Australian LNG market's owned by foreigners. They don't seem to have trouble investing in LNG, but we do in Australia. We need to think about what we're doing here. Having said that, I think there's a compelling reason on a weaker Australian dollar and undeniable growth from broader Asia, which you've only got to go up there and see. That the resource sector of Australia is probably the place to be for the next few years. I would say the financial sector of Australia is very overpriced, very overbought. Is a 3% frank dividend good enough? I don't think so. 4%, you get back to being interesting again. So some of the banks do show that, but certainly CBA doesn't. Having said that, we've also got to look at the middle market, the emerging companies, and just see whether we do have entrepreneurs. Australia does not produce enough entrepreneurs. We've got an education system. When you talk to Asians and talk to people in hotels and service, but they all have kids who want to come to Australia and be educated. They all want to come here. They all want to learn English. They want to be part. They want to come here to work and live, if possible, and be educated. And Australia just doesn't have a plan to really capitalise on that opportunity. And when you sit back and look at headlines as you do being an Australian and see, people being paid $1 million and $1.5 million to run a university and then cut everyone else's salaries, it's quite extraordinary. I mean,
Yeah. I know that you've long been talking about the growth promise of India and the opportunities for Australian companies in India. And I read somewhere that India is due to overtake either Japan or Germany as the fourth largest economy in the next couple of years. So we could be using our cricket diplomacy to really entrench the economic relationships with India. There's a great opportunity for us there, isn't there?
Unbelievable opportunity. It astounds me. And India will be the third largest economy in the next decade. So it doesn't matter whether it's Germany or Japan, it'll be a $10 trillion economy probably in the next 10 or 15 years. And far surpass anything else in Europe. And Australia, we can either be dragged along or we can join it. Australia needs to define itself as an Asian country. It's quite clear that we are, and therefore you think about everything in terms of what industries you're developing, what exports you're developing, and what population mix you need to have to be an Asian country. And that's a challenge for both sides of Parliament. They need to start thinking about it. And, some of the issues which Australia likes to stick its head up in terms of having an international view, it's extraordinary when you go to Thailand and Vietnam and you talk to people, locals, they have no idea. They have no idea about these international issues, nor should they care, and I think Australia cares. It's good to be a care, but getting involved in issues which we can't solve, and not trying to solve the issues which we can inside this country is quite, I think we need to get a hold of ourselves.
Yeah, I couldn't agree with you more there. Just reflecting on the last year, I'd probably say the story of the year was Trump's re-election. Another part of the story for investment markets was the emergence of the Magnificent Seven and how well they have performed and how well and how much money has gone into artificial intelligence. Let's turn to 2025. What do you think will be the big stories of 2025 from an Australian investment perspective? I know it's a big question, but it has to be.
Look, I just want to, before I get to the big, one thing that jumps out at you when you walk through Ho Chi Minh City, everyone's got a mobile phone. So there's a very good reason why American IP companies and developers, the Apples of the world, the Microsofts and such, are doing very, very well. Everyone has a mobile phone. Everyone is looking at a mobile phone for entertainment. So just leave that. In terms of Australia, we've got an election coming up and there'll be lots of giveaways. Where we will suffer is lack of vision, and where we'll spend another year debating energy while the rest of the world just grows around us. And that's going to be quite disappointing. The big issue for the world is interest rates. Europe has worked it out that they've got to get interest rates down. They're lucky they're not growing, so they can cut interest rates and not be concerned. The American comment last night from the Federal Reserve, look, I think we've got a problem coming with the Federal Reserve and the US government, the president. That'll probably develop pretty quickly after Trump comes into presidency, and that'll be an interesting discussion about what the Federal Reserve thinks it's doing with interest rates and the consequential effect that will have on the American budget if it's not brought under control. I don't know what the answer is. If I was worried, my worry for 2025 would be that the bond market wakes up one day and realises that the American government needs to print more money to pay its interest. Now, that could be positive, printing money, or it might be a concern to the bond market. Who knows? I think that the PEs of the world, dragged up by the American stock market, are very elevated. I don't see a high growth capital gain year in 2025. I think it's going to be very much an income year. If we can buy the right income securities and clip a revaluation as yields come down, we'll get a very nice return on the yield side of the market. when you look at the share market in Australia, which was traditionally a yield market, we've got a yield across the market pre today's correction of about 3.25%, 3.5%. It's not compelling in terms of yield. So Australian market has to grow earnings. And do we see earnings growth in 2025? Honestly, I mean, it's hard to see. There will be growth because we've immigrated 1 million people. So they will continue to compound and through the economy. But it's hard to see dynamic earnings growth. I think in terms of a balanced portfolio, you'd be more tilted towards income, and it's probably over-the-counter income, private credit, asset-backed securities, corporate debt. And I haven't changed my view. I've been saying this for a few months now. I said this in November. Yes, we hold our equities, but it's really up to the stock pickers now. It's been a brain-dead market for the last couple of years as indexes have gone up, and we've seen CBA just rocket, and the only explanation for it is too much money going into one stock. There will be a point where it reverses. It may be it started today, who knows? But I think it's a yield market for 2025, and there's still good yield available outside the equity market. So that's the good news.
Yeah, I think you put your finger on it earlier when you said that there's a great opportunity for Australia to export with a cheap dollar, and what I'm hoping for will be the positive surprise of next year is that China is forced into a much more effective fiscal stimulus, because they just haven't managed to turn the economy around, and that they start seriously spending money, and that draws up commodity prices and creates that opportunity for us.
Yeah, but they also will, and it's quite clear, and I did ask a lot of questions. I had some good English-speaking guides who were very well educated in Ho Chi Minh. There's no doubt that there has been, and there will continue to be investment by China in its neighbours. So that helps the whole region grow. So one of the effects of tariffs will be the diversion of capital by China into its neighbours. Now, the influence it has through that capital support, time will tell. There's no evidence that there's any more than capital. There's no legal influence. But as we know, there's a mixed history of Asia in terms of it's quite telling when you go through Ho Chi Minh City and you see the remnants of the war and a disgusting period 50 years ago. It's only 50 years ago, what foreigners did to that country. So it's amazing how it's recovered, and there's such a happy people, such a friendly people, and they're all about helping and growing and looking after their families, and something to be learnt from there in Australia. So my point is, I think China will divert capital internally, as you say, and expenditure, but I think it'll also outlay capital across the Asian region, and probably even into South America and South Africa. So that's one of the effects of this tariff attack that Trump's going to put on. So I don't think it's as bad as people think.
Well, that's a very good note to end on. John, thank you so much, and to our audience out there, and our viewers, our clients at Climb. Let's wish everyone a Merry Christmas and a Happy New Year, and a safe and successful 2025.
Great. All the best.
Thanks, all the best.